We are talking about NBFCs, of course, and we are talking about microfinance institutions. Ujjivan taking a bit of a beating in trade right now. The numbers have been weak for the company. Let's understand what's gone wrong this quarter and what lies ahead. Joining us on the phone line, Sudha Suresh, the MD and CEO at Ujjivan Financial. Morning, Sudha. Good to have you. Run us through the highlights of the quarter. What's led to this performance?
It's a good morning, and to take you through, I think the background basically is the demonetization impact of stressed assets, which we have taken a significant impact of in this quarter's financials. So as you are well aware that the November-December assets went through the stress of demonetization. However, when we look at the business from January to June onwards, we have an excellent collection efficiency, which is back to normal at 99.76. So over the period of 2 quarters, we looked at the trend of collection efficiencies, and we took also a look at the hardcore of the November-December stress assets which are not collected, and therefore decided to take an additional provision of 43 crores. Overall, we have taken a provision of 150 crores during this quarter. Having said that, as I said, business is moved back to normalcy in most of our branches and states, and we are looking at a good 18 to 20% portfolio growth during this financial year. We have disbursed about 1700 plus crores during the quarter, and in fact disbursements will grow quarter on quarter, and that will lead to the overall impact of the 18 to 20% growth that we are speaking of.
So you are saying that is this now just a 1 quarter thing? From Q2 onwards we should expect significant improvement?
So what we have seen and taken is a significant portion of the stressed assets in this quarter. We have put up an excellent collection team to look at overdues beyond 90 days and specifically into these stressed assets also during this quarter. And based on the collection efficiencies during July to September, if there are any provisions additionally to be required, we will take care of that in September. So having said that, we would say that probably June and September will take the maximum impact of the demonetization, and post that it should be a pretty clean operation.
What could be that provisioning figure going forward, because there was a large provisioning front in this quarter as well? Also, how much more slippages can we expect, especially in the next quarter?
So as I said, the current business and collection efficiencies are pretty good. So we are looking at only the assets of the demon period, and we expect maybe overall estimates at about 4% of the portfolio.
All right. As far as the increase in NPAs goes, does all of it have to do because of this provisioning that you have to do, or are you seeing pain and deterioration in other assets as well?
I think our asset quality across all verticals is very comfortable, be it the group loans, microfinance, or the housing, as well as the MSC. I think the portfolio quality remains stable and very good in terms of the businesses that we have seen in the last 6 months.
All right. There's been a dip in your NII growth as well. That is a bit of a concern. Can we expect a revival in subsequent quarters, given that there is some asset quality pain?
No, we can definitely expect a growth in our NII, and definitely based on that, our NIMs are also projected to grow over the quarters. This dip is essentially, reflected more because of a flat loan book growth during the quarter, as also reversal of interest income due to NPAs. I think the impact of this will wear out, and we will see better NIIs and NIMs, moving forward in the other quarters.
Okay, just to understand from you, because of loan waivers that have been announced in certain states, are you seeing any issues as far as credit quality, as far as recovery goes in those states, such as Maharashtra and UP?
Actually, we don't have any impact in terms of the farm loan waivers which have been announced in a few states, predominantly because we also don't have any agri portfolio, and we also, are not present in typically, those areas of affected states. Having said that, probably a very small collateral impact, could be seen in some states, but that is fairly insignificant.
All right. As far as fundraising goes, any plans in the future? Are you also seeing any pressure on your cost of funds right now?
In fact, our cost of funds is bound to improve over the next few quarters. As we are awaiting a scheduled bank status, we expect that our deposits will grow significantly, and we'll also be able to raise CDs with mutual funds, banks, and insurance companies. So we do see our cost of funding, in fact, coming down over the next 3 quarters. And in fact, for the financial year, we estimate that definitely there will be a dip, a dip of about 150 basis points over the previous year. and that definitely should augur well for our overall income and profitability.
All right, so just give us an outlook then, tie it together for us for rest of FY18. What are the key metrics that we should be watching out for as far as Ujjivan Financial goes?
So I think definitely on the growth side, you can look at the loan portfolio growth, which we are estimating at 18 to 20%. You can also look at a funding cost dip over the previous year, which is estimated by us at around 150 basis points. You will also see typically the NII and NIMs moving up in the next 3 quarters. I think we'll be able to give it a greater picture with greater clarity with the September results, which will take through any further impact of credit costs. And I think we are good to go. In fact, typically from the third quarter onwards.
Fair point, Sudha. We'll leave it at that, but thanks for joining in and sharing everything that's going on at Ujjivan Financial. The stock, though, taking a hammering in trade right now, down significantly at this point as we speak. But we'll keep it with the MFI space, because India Ratings has come out with a report as well, and they are saying that some of the MFIs are going to face significant pressure as far as credit costs goes, as far as cost of funding goes, especially those which have exposure to states that have announced a loan waiver, the likes of Maharashtra and Uttar Pradesh. Let's get in Jindal Haria of India Ratings on the phone line. Jindal, put this in perspective for us because we're talking to the management of Ujjivan Finance as well, and while they do not have much exposure to the states that you've mentioned, they're saying that cost of